What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, NEO, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. So the equity market momentum continued this week with all three major indices ending the week in the green. The Nasdaq saw a significant move up on Friday, good for about 1.47%, bringing it that much closer to the previous all-time high. The main reason for this is that the May job report number we received this week came in a bit below expectations. And why would that matter? It basically supports that we still have a ways to go when it comes to the recovery, and it gives the Feds more validation on their approach. This also makes it that much harder for those crying wolf over the risk of the economy overheating and inflation going out of control to support that narrative, right? So if you recall, the Fed's goal is to continue the current monetary policy until we've recovered most of the jobs lost as a result of the pandemic, including those for minorities. So they essentially want a balanced recovery. Simply put, interest rates are still a ways off. Think 2023 if we listen to the Feds. So growth stocks can rally, which is exactly what we're starting to see. And because more cash will need to be printed and injected into the economy, to support a recovery, it also bodes well for the crypto market, generally speaking. So you can imagine that for a portfolio like mine, these are great macro conditions. Speaking of crypto, Dogecoin was listed on Coinbase this week, and the Bitcoin conference is actually ongoing as I record here. I expect there will be a wave of interesting announcements to discuss over the coming weeks. But anyways, one of the channel favorite stocks, growth stocks, is ChargePoint, and they just went over their Q1 2021 earning call. So in today's video, I'll cover some of my takeaways, and we'll hear from their CEO Pascuale Romano on where he sees the company going. I'll add my commentary where I see fit, and then we'll wrap up the video with the weekly performance review expressed in percentage gain or loss for the portfolio. With that said, let's get into it. All right, so to start off, it's important to note that ChargePoint is not yet profitable, so items to really focus on, in my opinion, are going to be whether or not they are increasing their sales and revenue, how they're managing their cash burn, and ultimately whether or not they're sticking with the guidance that they've provided us. If we look at revenue for Q1 of 2021, they brought in $40.5 million, which is an increase of 24% over last year's $32.8 million. Network charging revenue for Q1 of this year was $26.8 million, which is again an increase of 36% over last year's $19.7 million. So the growth is there, which is good. Looking at their cash burn, they are spending more, but if you look at the operational expense bucket, it's focused on the R&D, and that's because they're partnering with more OEMs to bring more product to the market. The other line item where we're seeing an increase is in their sales and marketing, and again, this is because they're working to acquire more customers. They indicated during the earning call that they've doubled their team in Europe, and it is ultimately reflected by the increase in their customer base, not just in the US, but also in Europe, as seen by the increase in the fleet and residential adoption. The last item is going to be on guidance, and here ChargePoint expects revenue of 46 to 51 million in Q2 of this year, and they've confirmed their revenue outlook for the year to be 195 to 205 million. Again, not changing their guidance for the entire year. So far, it's looking pretty good. So we'll switch over to the interview with Pascuale Romano on where he sees the company going. And this was after the earning call he was on CNBC discussing. So let's switch over to that.
Yeah, for us, it's all about vehicles being sold into the consumer market and the fleet market. Our business is completely driven by vehicles driving demand for charging. And you're seeing that. You're seeing a tremendous number of announcements. You're also seeing great consumer reception to the new makes and models that are really going to drive demand for our products.
Now, to what degree do incentives from governments then influence the pace and rate, right, of purchases of EVs? To what extent do I guess the pricing actions by some of these companies influence that too? We've seen Tesla in the last few days say, hey, we're going to have to raise prices a bit to deal with some of these supply chain issues that we've seen globally.
Yeah, I mean, I think it's normal price dynamics in not only in the auto industry, but you're seeing that, I think, across the board in all industries. Prices move around with with supply chain issues, availability, demand, et cetera. But in general, EVs, you're seeing the most heartening thing is you're seeing more makes and models being introduced daily, and their price points, the available models at lower price points that are more accessible to consumers has gone way up. And that, I think, is the bigger driver to consumer adoption of electric vehicles.
Some really good discussion here by Pasquale. With that said, what I really want to bring your attention to is a couple of the slides that they were showing while he was talking. And if you missed them, just rewind and you'll see what I'm talking about. But the first one is regarding the fact that 62% of the top 50 companies are currently ChargePoint customers. And as it stands, and that's likely a big part of why this is, businesses can get up to $30,000 in tax credit for installing their product. And with a new infrastructure bill that's coming, this number could actually increase, again, once the bill is finalized and passed into law. This ultimately expands their commercial customer base even further. The second one is regarding the introduction of new make and model and the EV adoption is accelerating. Each OEM is currently pushing more and more models out over the next 5 years. We already know that 2022 will be the year of EV trucks. So between Tesla, Ford, Rivian, and a few others bringing more models to market, this should expand the number of customers that are interested in EVs. But more importantly, we know that Tesla new entry model is expected in 2023, and that's going to be good for around $25,000 is the price that they're targeting. And that will likely benefit from the $10,000 EV tax credit that should be implemented by then. And that would essentially make it a $15,000 car. So ultimately what this really means is that the projection slide that they showed earlier that has 1.5 million EVs by 2025 is overly conservative. Tesla alone will have installed capacity in the US alone for 1 million cars with between the Fremont factory and Giga Texas, right? And that's by next year. So I think that slide that they were showing 1.5 million by 2025, again, overly conservative. And all that bodes well for ChargePoint, right? The more EVs on the road, the more charging infrastructure is needed. And ultimately, ChargePoint wins because they own about 75% of the US market right now, and they're rapidly expanding in Europe.
To what extent are you watching what's happening globally in EV adoption? And, how much do those other markets affect how you invest and how you strategize about your growth?
Well, we're investing heavily in Europe, in addition to North America. And then we're also investing heavily in the emerging fleet segment, which is a global business for us as well. So we not only watch it, we think it's critical, and here's why. The auto industry is one where it cannot bring platforms locally to a market that are too distinct because the R&D support for that is challenging. And obviously you get economies of scale when you can sell into more than one market. We have the same exact dynamic in our industry and virtually every other. You need global scale to be competitive, to drive the R&D that you need to drive to support it. And more importantly, we need to be well integrated with auto OEMs, in-dash experiences, and the ecosystem around that. And they're going to introduce those platforms globally. So the global nature of this cannot be more critical.
So to be a bit more specific here on that last point that he made, ChargePoint has been really focused on establishing partnerships with automakers and integrating their software for a great in-car experience and ease of use. So think the Volvo partnership announced a few months back, and more recently, the partnership with GM. So I would expect that over the coming months, we're going to hear more and more of those types of announcements.
Are we going to get, on that commercial industrial front, are we going to get more EV truck stops? I mean, those seem like things that, that could be a backbone for this kind of business. How does that develop? Is there anything that you can do, either influencing policy or coalition-wise, to bring that more to fruition more quickly?
Yeah, so we're working with the National Association of Truck Stop Operators because they serve long haul and medium haul trucking, as well as passenger cars that want to use the facilities at many of the member truck and rest areas that are a part of that organization. So the answer is a definitive yes there. Our policy team is quite well distributed through the country, through not only our country, we also have a presence in Canada and the EU, because helping to define good policy in how we can streamline the acceptance of vehicles in the trucking segment that you talked about, or the broader fleet segment and the consumer segment, is all critical. How you structure incentives, how you structure not only incentives for vehicles, but incentives for infrastructure to get good infrastructure and no stranded assets. That's very important.
So we touched a bit on this in previous videos, but ChargePoint has and continues to be instrumental in helping push and expand the EV infrastructure. Remember the NATSO partnership leading to 150 DC fast chargers installed at truck stops along the US major highways? That partnership is actually going to fund a total of 4,000 new locations by 2030. You can add to that working with the city of New York now to build the greenest municipal fleet, and they are targeting a full conversion by 2040. They recently added FedEx to their fleet customers, so I mean, that's massive. And another one worth mentioning here is partnering with states like Colorado to add DC level 3 charging to their scenic byways. So currently they have 9 out of 34 locations that are operational, and ultimately they're targeting to have 34 new locations, or a total of 34 locations by the end of 2022. The bottom line here is that the EV adoption is quickly approaching the inflection point, and ChargePoint is partnering with not just corporations, but also government to push things forward. The last thing worth mentioning here is that post-earning call, all the analysts covering the stock have reiterated their rating, and there has been no downgrade, right? And the one that I paid the most attention to out of all those analysts is Colin Rush, and he has maintained his $39 price target with a buy rating. So ultimately, I think the trajectory for ChargePoint is looking bright, and that's reflected in the stock price and the increase that we saw throughout the week here. Okay, so with that, let's switch gears to our weekly performance review by percentage gain or loss for the portfolio. And as I stated earlier in the video, the current macro environment is for the most part conducive to growth stocks and crypto moving in the right direction. So I'll bring it up on the screen here. So you can see that we started the week in the red, down 1.82%, but generally speaking, we trended up nicely throughout the week, and at the top, we were actually looking at 17.18%. And as the week went on, we gave back some of those gains, ending the week at around 11.18%. This was a great week, and as it stands, I've almost recovered from the massive drop we experienced 2 weeks ago. And again, this is great, and I certainly expect that there will be more volatility ahead. However, each one of these dips is a great opportunity to dollar cost average and advance my positions, right? So as I've said in the past and in previous videos, fortunes are built in down and or stagnant markets, right? So every time we're trading sideways and we're seeing these big dips, it's an opportunity to buy more in advance as long as the fundamentals have not changed. Now, not financial advice, this is just what I believe and what makes sense to me. So make sure you do your own research before spending your money. If we can stay on the current trajectory by the time I reach my Q2 2021 earning call, so that will be in early July, that we'll have that episode, I expect that the portfolio will go to the moon. That is still one of my favorite clips, and it's likely going to get overused on the channel. But with that said, we'll leave it here for today's video. Hope you found the content insightful, and if you haven't already, hit that like button, share with others as it greatly helps the channel grow and get the content out in front of more people that may benefit from it. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. As a reminder, I post every Sunday and occasionally during the week. But again, this will do it. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.